Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Fox Factory stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a small cap company, 1.6 billion market cap. They're trading at $40 a share and they have 40 million shares outstanding. Fox Factory designs, engineers, manufactures, and markets performance car products and systems. The company offers powered vehicle products for side-by-side vehicles, on-road vehicles, with and without off-road capabilities, off-road vehicles and trucks, all-terrain vehicles, snowmobiles, and specialty vehicles and applications such as military, motorcycles, and commercial trucks. They also provide suspension tuning services as well as wheels, off-road tires, and accessories. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Pretty impressive free cash flow growth, 8 million up to 200 million. Their free cash flow per share is $5.17. So if you took the $209 million, spread it over the 40 million shares, each shareholder deserves $5.17. Pretty good margins. They converted 15% of their revenue into free cash flow in the trailing 12 months. Net income is a profit or loss on the income statement. It's revenue minus expenses. That is positive every year, but it's lowest in the trailing 12 months. They could have had a lot of stock-based compensation in the trailing 12 months, or possibly a write-down, like an asset impairment. Revenue is a sales for the company, and that peaked in 2022 at 1.6 billion, but then it went down after that, down 9% into 2023, down another 5% in the trailing 12 months. We estimated 4 years of future free cash flows. We also estimated the terminal value, which all cash flows past year 4. That's 2.2 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $1.9 billion. We divide that by 40 million shares. And we get a calculated stock price of $46. They're trading at $40, so they're trading at a 14% discount. It's a buy according to the model. Do you think this stock is a buy or sell? Let me know in the comments. There are 48 companies in the same industry as Fox, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend about the median in CapEx. Debt to equity ratio between the median and average. For every dollar of equity, they have 60 cents of debt. They generate a healthy amount of free cash flow. They rank 17th in market cap. Their price multiples look pretty good. A solid PE and price to free cash flow. They generate more revenue than the median, although their price to sales is worse than median. And they're growing a lot. Their 5-year annual revenue growth rate is 14%. Here's their latest income statement. You can see their revenue is going down. It was over 400 million in the second quarter of 23. Now it's 350 million. Cost of revenue also went down. Revenue minus cost of revenue gives you your gross profit. That went from 132 million to 111 million. They have a bunch of operating expenses. Their biggest one is G&A, 37 million. Sales and marketing is 30 million. So operating expenses are lower than gross profit. So they do have positive operating income, 19 million. But last year was much higher, 53 million. They spend 14 million of interest on their debt, triple last year. So their net income is 5.4 million, down a lot. Their EPS is only 13 cents. It was close to $1 last year. But they are decreasing shares. Last year, 42 million. Now it's 41.7 million. So to summarize, I have them trading at a 14% discount. And I give them a 7 out of 10 ranking. Would I buy them? Also 7 out of 10. I do like what they do. Their products go into cars, which everyone uses and needs. Their product base is really scalable, which I love. They have good ratios. I like the PE a lot. They generate a good amount of sales for the size of the company. The reason I'm giving their financial 7 out of 10 as well is because they're growing their free cash flow. Even though their revenue is going down, they're managing expenses well. Once their revenue rebounds, we should see free cash flow really balloon. And the fact that they grew their free cash flow 2,400% from 2021 to the trailing 12 months is an impressive number. And I get it was only 8 million, but still, it's still pretty cool seeing that type of growth. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.